All right, so we're here today with another episode of Breaking the Stigma of Manufactured Housing and Mobile Homes with Mobile Mailbox Money, Silvercrest Opportunity Fund, and Win Mobile Homes. Just quick case subject here today. It's important to understand the dynamics of manufactured housing, especially here in the local market of Arizona. These individuals that bought these properties 20, 30, 40 years ago and fulfilled the life cycle up until this point were a completely different demographic of buyer. That's why the association with mobile homes and depreciation is so popularly adhered to. So here we're out at lot 83 here today, and I bought this property from an elderly couple who were in a dire situation, which is we're in a transition phase from obviously owning this property in its as-is condition and moving to a assisted living community. It's important to notate that this happens to be a 55 and older community, but that being said, the dynamic of buyer of a manufactured home in the 80s, 90s, 2000s were a lot different, as the communities were a lot less in quality, as well as it had more of a negative connotation towards manufactured housing. I bring that up because the shift in the market behind mobile homes and manufactured housing is currently taking place because of the institutional investment appetite into these parks. So as these communities get traded at a high equity multiple, they are incentivized financially upon the acquisition to increase the quality of that community as well as raise the lot rents. That being said, over this 20, 30, 40-year life cycle of these manufactured homes, it's just now taking place where the dynamic of buyer is actually switching from a lower income individual to someone that just purely can't qualify for real estate, with average purchase prices of $400,000 here in Maricopa County, and the ability to not qualify for that $400,000 because they make less than $80,000 a year with little to no debt, or too much debt, in other words. It's a new buyer. That buyer is now looking into manufactured housing because they're seeing a high rental cost as well as inability to qualify for a residential purchase because the lack of income or lack of a tax document and things of that nature. So with the change of dynamic in manufactured homes, it'll ultimately tell true to the depreciation aspect of manufactured housing. With the new dynamic of owners in manufactured home communities, the quality as well as pricing is going to stay that much stronger, as you have a higher qualified client who's now wanting ownership in one of these manufactured homes, when historically it was a different dynamic of buyer just 10, 20 years ago. So that's why the connotation towards manufactured housing is such a depreciating asset. Well, really, that depends on what market you're in, as well as the availability of single family properties and what that rental cost is. If someone can own a manufactured home for what they pay in market rent and they get pride of ownership, their rental rate's not going up crazy, they may hate their landlord, that provides an opportunity to own a mobile home for what they pay in market rent. With the new different dynamic of buyer here in the Valley, as well as the investment strategy, it becomes that more palatable and higher grade of investment for a capital investor wanting to diversify out in the market and hearing from individuals, hey, these homes depreciate. Well, historically they did at a heavier rate because it was a different dynamic of buyer. Well, now these buyers are more highly qualified. They're making more month over month in verifiable income, as well as the institutions buying these communities are all on the same page and raising the quality. So what does that mean? That means values are going to hold stronger historically. Their values are going to hold stronger than historical representations of manufactured housing. So that's Mobile Mailbox Money, Alden Guajardo, and Silvercrest Opportunity Fund, and we are breaking the stigma of manufactured housing and letting you know, listen, this is a new allocation towards this product. Mobile homes are being seen in a different light now that institutional investment houses are raising the quality. Listen, people, where else can you buy a property here in Arizona for under $100,000 and cash flow? That's really hard to acquire. So that being said, there's a large institutional investment appetite in mobile homes and a new dynamic of buyer ultimately translating to the higher hold of values, a stronger play for an institutional investor wanting to participate in the passive cash flow of a manufactured home note. That's a quality home with a qualified client cash flowing in a 30-day program. So if that sounds like an opportunity to you and you hear individuals saying, hey, don't do that because they're a depreciating asset, well, I have news for you today. The ability for a mobile home note to cash flow higher cash on cash returns than conventional real estate investment strategies in a 30-day program sounds like a myth or too good to be true. Well, that's not the case. We're here doing it on a monthly basis as well as providing a mitigated risk for our investors who are hearing, hey, those homes depreciate. Okay, listen, people, the ability to cash flow on these properties is bar none. You cannot acquire another property on a note at this purchase that's a performing note and cash flow in a 30-day program at this high of a rate. It's impossible. The numbers don't work for an end user borrower, as well as this is fitting a need in affordable housing, one of the largest needs in the country. So that's mobile mailbox money, Win Mobile Homes, and Silvercrest Opportunity Fund. We're here today in Mesa, Arizona, in a community by the name of Sunnycrest. So that's just a case scenario of one of the various sales and notes being originated here in my local market, Maricopa County, Arizona, and the Greater Valley area.
Morning, everyone. I'm Alden with Win Mobile Homes. How many individuals have heard the headlines behind institutional investment houses saying that you'll own nothing and be happy? Have you guys heard that quote before? So there's a lot of build to rent, as well as average purchase prices here in the Valley have approached like $500,000. To just qualify for a $500,000 mortgage, an individual has to make over $80,000 a year with little to no debt. There's a problem. There's a big problem with affordable housing here in the Valley and bloodshed from new families, as well as people seeking active retirement. If you know someone that's currently struggling and wanting ownership, qualified ownership here in the Valley, a manufactured home may be a great option for them here in the Valley on leased land. Yes, it's on leased land, but it offers a more affordable price point in the market, as well as qualified ownership. So if you know someone that's in a situation like that, that's a new family or someone looking for active retirement, I'd be happy to educate them. Again, Alden with Win Mobile Homes.
Thank you, Alden. Let's stop. Yeah.